All right. Hello, everybody. Welcome back to another Market Open. Hello. We're going to get started in a little bit. Richard, you were first. Let's go. What's up? Some interesting stuff. We just had Alex Karp go on Palantir. We just had Alex Karp not go on Palantir, but go on Cnbc. Didn't expect that. Makes sense. I guess that's why he released that shareholder letter, because he was going on CNBC soon. Richard Y0 likes caught slipping. Jason, what's up? Lil Nito, what's up? Uriel, Ahad, King Zion, Amit, I'm back. I told you. King Zion just randomly comes back to like troll in the chat. Good morning, family. Good morning. He's always on CNBC. He's actually not always on CNBC. Last time he did it was months ago. And before that, it was even longer. So I'm excited that he's on CNBC. So let's look at that right now. Alex Karp's on CNBC. Let's listen to some of the stuff he said. Then we'll get into some of the markets. All right, this one. Here we go.
It's a zero-sum game in Russia, and there is no ability for Putin to lose. He can't just fail at war and then retire, which is what we're used to in democracy. You know, politicians fail and then we have another politician. And so the reason why I was sounding the alarm at Davos, and then again when we talked to much derision, was simply this combination of American software, the way we build software, plus a kind of heroism that is very unusual, would outperform the giant of spend. And that leads to just this jarring reaction. And we don't want to believe in the West that people would be zero-sum. It's a zero-sum game in Russia, and there
in Aspen, and prior to that in Davos, in some ways you called this in terms of this potential threat. So where are we really at this point?
Well, you know, it was a pleasure to talk to you then and a pleasure to talk to both of you now. You know, when we were talking about the reality that nuclear weapons are on the table 3 and 2 months ago, of course, that was derided. The general belief I had just comes from building a software business and seeing software in action in war, where software plus heroism can really slay the giant. And I know the Russians just underestimated the power of kinetic plus software plus heroism. And then I believe it's a zero-sum game in Russia, and there is no ability for Putin to lose. He can't just fail at war and then retire, which is what we're used to in democracy. You know, politicians fail and then we have another politician. And so the reason why I was sounding the alarm at Davos, and then again when we talked to much derision, was simply this combination of American software, the way we build software, plus a kind of heroism that is very unusual, would outperform the giant of spend. And that leads to just this jarring reaction. And we don't want to believe in the West that people would be zero-sum.
Okay, there's a couple more clips. Again, these just dropped like this morning. Where am I? Hold on. No. I have to go here. Let's see. Here we go. Here's another one. All right.
Public.
Alex, if all of this gives us such an advantage, why have we seen such a hit to so many software companies? I think you guys are down 58% this year in your stock price.
Well, you know, look, bad times are incredibly good for Palantir because you sort out, you get the durable. There's this thing where you've been involved in these things for long years, like Palantir's 20 years old, 18 years old. The bad times really uncover the durable companies, and tech is going through bad times, and there are lots of reasons, interest rates, other reasons. But you will see that the durable companies that come out of this in 3, 4 years, 2 years, however long it takes, are largely going to be from America, largely from the West Coast, and they're going to be very focused on producing things that actually matter. Will this like deadly tidal wave wipe out some companies? Yes, it will. And public.
Alex, if all of this gives us such an advantage, why have we?
That's an interesting point, right? He's basically saying, yeah, the stock sucks right now, but give it a little bit of time. And I think the stock's going to be in a much better spot, given the companies that matter are going to be here and the companies that don't matter are basically not going to be here. Let's see what else he says. All right, here's another clip.
In terms of your employment and being able to hire talent, what are you seeing right now?
Look, bad
How
times.
easy or hard it is. Plus, by the way, I imagine there are a lot of employees sitting looking at the stock price saying I'm underwater, or I have half of what I thought I had.
Well, look, we built Palantir. We were private for almost 16 years, and our share price on the non-private market was going down. So, like, these times, in the end, bad times help us also because the alternatives end up being like our main competition is I want to be a cockroachholder.com who recruits our people. That's our actual competition. A startup that is 2 days away from failing, but engineers don't know it. Those companies aren't getting funding. And so, like, instead of going to mycockroachtrap.com, people are like, yeah, the stock is down, that we're doing crazy important things, and the alternatives suck.
Do you see, in terms of clients, though, right now, spending, I mean, on the corporate side and even on the government side, given what's happening in the economy?
We see a big difference between U.S. and, to be frank, probably too frank, the U.S. is just completely different than everywhere else. Our U.S. business has grown 67% a year the last 3 years, from 233 million to just over $1 billion. The rest of the world, people react. Americans, for all of our foibles, we react to bad times by rolling up our sleeves and adapting. The rest of the world has trouble with adapting at the pace we adapt. So yes, our business is being negatively afflicted by the inability to in other countries to adapt the way we adapt in America. On the other hand, we're an 18-year-old business. The last 3 years, the American segment is growing 67%, despite me as a front man. So it's like, maybe if we have a more successful front man, we can even, I'm not planning to go anywhere, but it's like we're despite or because of our various disabilities, we're growing 67% a year in the most important, most interesting market in the world. And yes, we are not growing that way in Germany and France and other places. And I don't expect to grow that way. I do think there'll be a handoff. What I think is going to happen is we're going to have a couple years of terrible times. Those companies that are most robust will survive and thrive.
There he is. There's the man. He was talking. All right. So we'll analyze some of the stuff he said in a little bit, but we are 2 minutes away from the market open. So check out the market, see what's going on. We are red in the stock market. Today's probably going to be a buying day. Tesla down. S&P is down. DNA Ginkgo Bioworks relatively flat. ARC is 9 cents away from going under 40. We might see that happen today. Palantir actually up in the pre-market. So Palantir is a little anomaly here. Google is down in the pre-market. Anything below 90 on Google is like load the freaking boat. That's like less than 1,800 pre-split. But we still got to get down to the low 90s. That's when I think the S&P is going to hit 360 if Google hits the low 90s. So we'll see if that happens. But it's a red market. It is a red market. All right, we are 15 seconds away. Thank you all for being here. I appreciate you so much joining me on this morning. We are Thursday. We're getting close to the end of the week. Make sure you try your hardest this week to do whatever you need to do. I'm going to try my hardest. All we can do is try our hardest on days like this because we're human beings. On September 22nd at 9:30 a.m., the United States stock market is open. Hope that woke your ass up. And now it's time to analyze the markets. Okay, Tesla 300 flat. AMD below 74. DNA relatively flat. ARC 4010 flat. Palantir drops right at the market open. Of course. Why wouldn't it drop right at the market open? There it is. How can you not buy today? Yeah, I want to see how much buying I'm going to do, though. We got to see how bad it goes. Karp is so underrated as a CEO. I agree. Hey, Amit Toon, what's up? Got on time for the bell. I love it. Amit, did you buy Google or Google? I bought Goog. I bought Class A shares, but they're basically the same, right? It's not that different. Microsoft 238. We've got Facebook. Goodness, this stock is getting zero love. Facebook cannot get some love. If I mean, it is getting hurt the most out of all the big tech companies. It's like it has a price of sales of 3. I think Palantir is more expensive than Facebook if we look at price to sales. Yeah, Palantir is trading at a 9 price to sales. So, I mean, I have a feeling when the bull market comes, Facebook's just like people are going to realize how ridiculous it is. But if you want to get the benefit of it, you got to buy it now, right? And that's the hard part. Nasdaq 200 points away from getting below 10,000. We've gotten below 10,000, right? Let me look at. We were below 10K. Yes, we were below 10K. We were at 10,565 on June 30th. And July 29th, we were hitting that a little bit as well. So we got below 10.5. So 10.565 is the bottom on the NASDAQ, which means we would have to go down about 700 points from here to have a new bottom. This is probably where the S&P would get to 360. If that happens, that happens. Jerome rose interest rates. The market is basically saying they didn't like it. I mean, they liked it at the moment. We thought they baked it in, but they didn't. They didn't really do that. When the bull market comes back in 4 years, I kind of think the bull market will be back before. I think it'll be back earlier than we think. I kind of think there's 2 things that are going to happen in the next 2 years. Either we're going to have a 2008 type of crash, which if we have a crash, it's going to be a crash. It's going to be bad. I kind of don't think that's going to happen given inflation has peaked. Or inflation's going to easily start to go down, and over the next 6 months we're going to have a massive rally. I think those are the 2 levels that are going to happen. Now, could we be flat for the next? The thing I don't get about people saying, "Oh, we're going to be a flat market," is if inflation comes down, we're not going to be flat. We're going to the freaking moon if inflation comes down. The market's going to be super excited, and the Fed is not going to be able to raise interest rates. So what else is going to happen? We're going to rally. Everyone's tired of a crappy market. Even if that happens mid-2023, that would have been 16 months of waiting for a real rally, a real rally, And so I think that's very possible. S&P down now below where it ended yesterday, 376. So I think that is very possible. Now, if the markets are if inflation doesn't go down, then either the market's flat while we're trying to get it to go down, but the only way it can't be flat either in that scenario. It has to be a crash because the Fed's going to keep jacking up interest rates to get inflation to go down, which means we're going to screw the economy even more. So either inflation goes down and we rally, or inflation does not go down for the next 16 months and we really crash the economy. But I don't see how staying flat would be possible. I mean, that it could happen, obviously, but I don't know. Bitcoin down below 20K. Ethereum down below 1,300 as well. Good morning, Miyoko. What's up? What's up? 4 years of buying the dip. That's true. Whoever is buying the dip for the next, if it is 4 years, on the other side of that, you're going to get a lot of money. Meta's undervalued if you're planning to hold 5 years. Yeah, and that's the thing. Meta's absolutely undervalued if you're planning to hold 5 years. It's just, it's weird looking at Meta. Inflation can go down if we go into a massive recession. Yeah, and that's the sucky part. That to get it to go down, we would have to have a recession. I think Kathy's argument is we don't need to have a recession to get it to go down. It'll just go down. That's what Elon Musk is saying as well. But we're gonna see. Samart, what's up? DNA makes no money and could easily be $1 in this environment. I agree. DNA could be battered down even worse. So the fact that it's holding now, again, I think the S&P would have to really get hit badly. The market has to go down another 10% for DNA to get even worse. DNA's floor has been 209 and it's been pretty stable in the range that it's in. So I guess we would have to see how it happens. Nobody got 4 years to wait. Honestly, I think it could go back up right after the election, bro. We have a nice little CPI report. The Fed goes 50 and then boom, we go inflation's up. That would be pretty cool. I'm not going to lie. That would be cool. All right, let's see TikTok and Facebook. What's going on with TikTok and Facebook? We're talking about Meta, right? So we might as well analyze that thing happening right now.
As Yesterday, TikTok says it is no longer allowing political accounts to raise money on its platform, and more changes are coming. Is this a sign that the popular social app is getting safer and avoiding the kinds of problems that plagued Facebook? Well, John Ford is here, to weigh in on maybe one side or another.
Or both.
Or both. What do you think? What do you think?
Andrew, this is an important move by TikTok ahead of a midterm home stretch where young people, TikTok's core audience, are going to be decisive in a lot of cases. Blake Chandley, head of Global Business Solutions, says TikTok's requiring campaign and political party accounts to be verified and is preventing them from accepting payments on the platform. So this is a big deal. TikTok has an estimated 1.6 billion monthly active users and an intensely engaged user base. How engaged? Well, Campbell Snacks did a TikTok challenge late last year to see how many goldfish crackers people could hold in one hand. It drove 2.9 billion video views. Boban Marjanovic, who has the biggest hands in the NBA, took the record with 301, by the way. You get the idea. And Gen Z is now using TikTok as a search engine to find restaurants and research purchases, not just learn dances and spread memes. So it's fair to conclude a lot of people are using it to form political opinions and even direct donations. So yes, it's significant that TikTok is taking the concrete step of making sure the political party political economy on its platform doesn't get out of hand. Despite all the concerns about TikTok, its leaders are taking responsible steps to prevent abuse, Andrew.
But then there's the question, is the biggest concern about TikTok in your mind through the verified political campaigns would raise money there? Is that the issue?
Well, yeah. On the other hand, real American political campaigns raising money through TikTok isn't the problem, is it? I mean, you know what's more interesting? Who's clamping down on TikTok? TikTok has exclusive access to a trove of data on what young Americans are thinking about every moment of every day. Economic anxiety, immigration angst, abortion controversy, it's all on TikTok. The short videos and reactions are like an Apple Watch on the body politic, reading our heart rate, tracking our location. If you wanted to swing an election, what you'd want is that data and an app that pushes messages out to a massive audience in a completely customized, unauditable way, which is what TikTok does. TikTok is entirely owned by ByteDance, a Chinese company. If you hadn't heard, China's known to prefer having control to not having control. Yet, TikTok would have us believe it's led by a Singaporean CEO based in Singapore, and top U.S. executive Vanessa Pappas, the chief operating officer, told lawmakers last week the company isn't headquartered in China because, as a global company, it has no headquarters. We are to believe China built the breakout social app of the decade, put foreigners in charge, and locked itself out of the data. As the kids on TikTok say, that's cap.
Okay, hold on, though.
Crap.
No, cap.
I know.
Yeah.
What do you think U.S. regulators should do? Has it reached escape velocity to the point where even if you wanted to shut it down, you can't? And do you actually believe that China is taking that data and using it in some nefarious way?
Well, first of all, I think
3 questions in one.
It's 3. I'm going to forget like at least one of those questions, if not 2. But it's disturbing to me that there's been so much focus on just China, right? There has to be policy overall on what's done with Americans' data by American companies, as by New Zealand companies. Yep. But threats can come from anywhere, and I think when there are nefarious actors out there, they're going to be smart enough to make sure that it doesn't appear to be coming from a country that the U.S. is primarily concerned about.
And Roger, it seems like the market.
Guys, Joel is right in the chat. Amit sold Tesla at the top. For those who didn't know, I sold my 1 share of Tesla at $310
as of yesterday,
and I made a killing on it. I made an absolute killing on it. Made $15. So it made sense to sell at the top, to be honest. I was just like, all right, because I only had 1 share, and I was like, this is dumb. I'm not building out a position yet. I'm not going to average down. I'm not going to DC up, right, at dollar cost average up at 312. So I was like, let me just sell it and wait till it goes lower. And so we'll see. But anyway, the TikTok stuff is very interesting. I mean, if TikTok gets banned, that's great for Meta. So we're going to see what happens. All right. I said there was an Alex Karp interview. There's a lot of people who joined. We looked at a little bit of it in the beginning. So it's a 4-minute clip. So for those who joined because of the title, this is the Karp interview, and there's probably more of it, but we're going to watch these 4 minutes, and then we'll get right back into the market.
He's not bluffing when he says he's going to use all means to defend Russia, including potentially using nuclear weapons. Joining us right now to talk about this and Putin's nuclear threat is Alex Karp, CEO and co-founder of Palantir. And the last time we saw you in Aspen and prior to that in Davos, in some ways you called this in terms of this potential threat. So where are we really at this point?
Well, it was a pleasure to talk to you then, and a pleasure to talk to both of you now. When we were talking about the reality that nuclear weapons are on the table 3 and 2 months ago, of course, that was derided. The general belief I had just comes from building a software business and seeing software in action in war, where software plus heroism can really slay the giant. And I know the Russians just underestimated the power of kinetic plus software plus heroism. And then I believe it's a zero-sum game in Russia, and there is no ability for Putin to lose. He can't just fail at war and then retire, which is what we're used to in democracy. Politicians fail and then we have another politician. And so the reason why I was sounding the alarm at Davos, and then again when we talked to much derision, was simply this combination of American software, the way we build software, plus a kind of heroism that is very unusual, would outperform the giant of spend. And that leads to just this jarring reaction. And we don't want to believe in the West that people would be zero-sum. We're not that zero-sum in the West.
So basically, he's been backed into a corner. He's a caged animal. He will do crazy things that we
You're
can't.
backed into a corner where the corner is, if you fail, you'll be killed. Your friends will be killed. Your family will lose their assets.
So how do you then handicap what his options are?
Well,
and what the real possibility of him using nuclear weapons?
What I believe we should do is continue to support Ukraine and begin to engage in a dialogue where we figure out what it looks like for him to fail without having to say at home he failed. Now,
so what does that look like to you?
Well, Ukrainians have to decide. I know, having gone there, that they very much believe that their territory should be respected. I think we in the West should stick by the line that every country should be able to have its own sovereignty over its territory. I don't know, but I do know the things that we discussed and predicted that Ukraine would massively outperform have happened. The danger scenario of massive outperformance is that your adversary is backed into a corner, whether that's.
But if he's failing and we need to find a way for him to look like he hasn't failed to his own people, what is that?
Well, we're very good at that in the U.S. We're failing at a lot of stuff, and we convince ourselves we're not. Somebody has got to be somebody who's very good at this. Like, what does a politician do for a living? I mean, I happen to be more on the left. Some people are more on the right. The job of a politician is to convince you haven't failed, and then get your vote.
You sound like Henry Kissinger, though.
So,
basically, we're going to have to give something away. But it's
Henry, I discussed this with him. He believes that my belief is the Ukrainians decide, but you need someone who's not me. Like, I'm not adept. My job is to actually deliver something that works and win. There are people whose whole professions are to help you explain to your people why it wasn't a failure. I don't do that for a living, but I do know that somebody who does that for a living needs to be very engaged right now, because if you've won something against all odds, whether it's less importantly, a tech company, or you've defended I don't actually believe most people in the West, in America and England, really believed Ukraine could win. And in fact, I know they didn't believe this because through our clients, hear what the assessments were. But if you've won against all odds, you've cost your family members have died. There's no way you're going to compromise unless it's on your terms.
That's why I think it's gotten so much more complicated.
Yeah, exactly. And then you have to roll in people who are specialized at that. And people who are specialized at are called politicians. That's what they do for a living. And they need to sit down and figure out how do you explain to the Russian people that although you failed, it's not a failure. And there is a way to do that. But first you have to begin. And the beginning part is, look, if you've won something in a negotiation against all odds, both parties have to accept you've won.
A lot of people kind of caught on.
Very interesting stuff. The reason I think he was saying that, and it's important to recognize this just from a pure negotiations perspective, is because Russia can't think that they lost. If Russia thinks they lost, they may go to more dramatic measures to ensure that Putin is seen as a winner in front of his people. Could that be a nuclear weapon? That could be, at the point where he's like, I don't care. Humans are irrational. We are animals at the end of the day. We are stupid little creatures that do stupid stuff to make us feel good. And so I think when Karp is saying, now obviously he's not talking about like the business, but it's incredibly important to recognize that the CEO of a software company is having that type of a discussion on national television, right? Like he's not talking about their go-to-market strategy, where some people may want him to talk about that. He's talking about, hey, here's what's going on in Russia, Ukraine. I know this because I talk to people day in and day out that are dealing with this situation. And by the way, my software is probably saving Ukraine from being destroyed and losing their sovereignty. I mean, that's an interesting argument, man. Have you watched Redacted? No, I have not watched Redacted. So, you know, and that also is, it speaks to, I think, some of the problems with what's going on right now in the Russia-Ukraine situation, right? How do you sit down with Russia and be like, hey, you guys, even though you guys brutally lost and your economy is decimated because every company left Russia because of what you guys did, you guys still did okay, right? Like, how do you convince this irrational dictator that you guys still did okay? Before he basically decides, nope, I'm just going to like bomb everything because I feel like the world is slipping out of my control. Like it's a scary situation to think about. Spotify, damn, Spotify's falling. $93 right now, Spotify. Tesla, $296. I sold Tesla at the top. I finally got something right at the top. Sold it all. Made my $15. I should get some good coffee today with that $15. That's what I should do. Even though it's probably like $7 with taxes. But I should go. No, they take 20%, right? 20% off the top. So they are taking out of my $15 profit, $3. So I have $12 today to spend on breakfast. By the way, comment what you're eating for breakfast today. I love knowing what people eat for breakfast. Chris, what's up? Split Palantir, maybe, but then the CEO wouldn't get to talk about all his fun stuff about the government business. I mean, I guess he would. It wouldn't be encompassing of all of Palantir. So it's a beautiful morning. The market is crashing. Would like to see Jay Kramer there asking Karp questions since he doesn't care much about. Bro, you know, it's so ironic you bring that up, David. I was watching a clip of Kramer yesterday when Palantir went public. Like YouTube recommended it to me. It was Palantir goes public at a $22 billion valuation, and Kramer was talking about it. Samosa, that's the most Indian thing to eat in the morning. No, you're supposed to reinvest the profit. The $12? I'm supposed to reinvest the 12. I should buy 4 DNA shares with the $12. Coffee, biscuit. Yo, your mic is hot as hell every time you start speaking after video clips. People with headphones are beating. Darth, I'm sorry about that. I will try to make sure when the video clip ends, I like slowly approach the mic versus get super hot. All right, let's hear this. The Fed knows the interest rate hikes will produce a hard landing. David Rubenstein. Let's see what he has to say.
Off guard by what the Fed did yesterday, not in terms of raising 75 basis points, but Jay Powell saying that, look, we're going to be looking at a longer time of higher rates. The terminal rate now 4.6%, maybe 4.7%. It surprised a lot of people on Wall Street, but did it surprise you?
Well, not really, but I think what the Fed has is 3 powers. They can increase interest rates, they can telegraph what they're going to do, and they can explain what they have done and are about to do in the future. And what yesterday, I was not so much the surprise about the 75 basis points. I think that was telegraphed in advance. But what Jay Powell was saying is they're very serious about getting the inflation rate down to roughly 2%. And to do that, what he's saying in Fed speak is that the unemployment rate is going to have to go up much higher than it is. It's about 3.7% now. He didn't say this, but it probably will have to go to about 5 or 6% before inflation can get down to 2%.
Whoa. Sorry. I hope the mic did not get hot. I'm super sorry if the mic got hot that time. Dave Rubenstein, for those who don't know him, legendary investor, billionaire, like the guy knows business. Wow. He thinks interest rates have to go to 5 or 6% to curb inflation. This is so interesting because someone's right and someone's wrong. Either Kathy and Elon are right that like, nope, it's gonna go away naturally and we're gonna rally. Or Jay Powell's holding the truth that actually interest rates are not going to peak at 4.6% in 2023, which is what he mentioned yesterday, but they're going to have to go up to 5 or 6%. Remember, Paul Volcker had them at 20% in the 70s. Interesting. Also, real quick, but while we continue, first of all, shout out to Ren Silverstreer. $20 super chat means the absolute world, Ren. Thank you so much for that super chat. He says, buy the game. I'm assuming that's an investing book That's what I would imagine. Is it penetrating? Is it by Neil Strauss? Let me know if that's exactly what the book is. If not, let me know. But wow, that's really, really interesting. All right, let's hear what else he has to say.
And that's the message that the market received, that the Fed is very serious about getting it down to 2% in the foreseeable future.
We've had a running debate about whether the economy is really starting to suffer from these higher rates or not. And
oh, he said unemployment, not interest rates. Okay, gotcha. Regardless, though, that being higher than 4%, that's still a lot. Because 4% is 1.3 million, so 5-6% would be, another 800,000.
Answer to that depends on where you sit. We've gotten various answers. Anybody who's involved in housing and real estate have said yes, the pain is here, and it's here pretty deeply. We're feeling it. Other places say no, he's got to keep raising interest rates. You've got a lot of different businesses that you see through Carlyle. What are your thoughts on how the economy's faring and whether it can, or whether we need to see more interest rates to bring down inflation?
Well, I think interest rates will have to get higher to get inflation down. I don't think we're in a technical recession right now, which is to say another quarter of negative growth. I do think that the third quarter will be positive growth, but we're in a very low growth range. Let's say 1.5%, 1.5% growth or something like that. Europe, I think, is not in good shape. I think Europe will more likely tip into a recession before the United States does because of the higher energy prices they have to deal with compared to what we're dealing with now. But I do think that Jay Powell's main message yesterday was we're going to be coming back again with higher interest rates. And the market had before yesterday thought that maybe next year the Fed would stop increasing interest rates. And the big change is the market now is fairly confident that the Fed will increase interest rates early next year as well, and not just pause for a while or even lower interest rates, which what some people in the market thought would happen early next year. It's clear from Jay Powell's statement that is not going to happen. They're going to probably.
That is also a good point, right? The market thought the Fed would stop raising interest rates by next year, probably 3 months ago. Now it's pretty obvious they're going to be raising them into mid-2023. It's just a question of if inflation goes down dramatically in October, November after the midterms, how much they raise them by. But they are probably gonna be raised soon. Everyone in the chat is saying to please like the stream. These are the OGs of the channel. So yes, if you're watching, please give it a like. I usually don't ask, but if you're watching, that would mean the world. All right, let's get back into it.
Probably have to increase interest rates again in the first quarter of next year.
What are you seeing? Where do you see inflation? How persistent do you think it is? Why do you think rates have to go a lot higher to shut that off?
Well, the only way to really deal with inflation is increasing interest rates of the available toolkit that we have. And it's clear that when you increase interest rates, inflation will come down over a period of time. When I worked in the government, Paul Volcker showed that very clearly. That produced a great recession in the early 80s. And I don't think anybody wants anything like that again. And whether the Fed can engineer a soft landing or not, a so-called soft landing, which means avoiding recession, nobody really knows. But I would say most people on Wall Street today think it's very difficult to avoid a soft landing if the Fed is going to get inflation to 2%.
Let's just talk about specifics in business, though. And I'm asking this just because we're trying to gauge as many economic data points as we can. We had Barry Sternlicht on with us earlier, was it this week or last week? He was talking about how things are really starting to roll over. You see the pain in the housing market. You see pain in places like airline prices that are already starting to come down. He said hotel rates, you can see them starting to roll over too, that things are happening much more quickly than the Fed may realize. And I just wonder what data points you're watching in your own businesses in terms of if you come down on the side of inflation still being a big problem, where do you see that inflation? Where are the real numbers? Is it in labor? Is it in input costs? How does it play out?
Well, there are many different factors. Labor prices are going up, there's no doubt, because there's a bit of a labor shortage, and therefore prices are going up to get good labor. There's no doubt that the supply chain is not as strong as we'd like it to be or as efficient as we'd like it to be. And as a result, you're paying higher prices. And generally, there's a lag factor. So it takes a while for the market to catch up to the reality. And I think we've had inflation for a while, but now the prices are going up a bit, reflecting what's happened 3 or 4 months ago. At our firm, we take the several hundred companies that we have and extrapolate their quarterly sales, their earnings, and their performance, and extrapolate it and compare it to what the U.S. government is doing or the U.S. economy is doing. And over a period of many, many years, we have found there's some correlation between how certain companies perform and how the U.S. Economy is performing. And right now, I'd say we don't see a recession imminent right now, but I can't say it won't happen in the future. And I think it's likely that the Fed will not say they want a recession. They don't say that, and they never say that, but they know the only way to really get inflation out of the system is to jack up interest rates, and that inevitably will produce probably a hard landing. They won't say that, but probably something between a hard landing and a modestly hard landing is what they would like.
Okay, so that makes a lot of sense by David Rubenstein. Now basically he says it's going to be a hard landing, the interest rates are going to be rough, and Jay Powell's not explaining how bad it's going to be. I think it all depends on how inflation is going down. Now, I want to talk about the 2-year and the 10-year. Okay, we need to talk about the 2-year and the 10-year because this is really important to understand, and it's going to help us have a better understanding of what's going to happen long term. So the 2-year Treasury bond and the 10-year Treasury bond are basically these things that exist that says, hey, government, I'm going to give you my money and I'm going to get a guaranteed rate of return on that money. So the stock market on average, you can get from the S&P 500, let's say 7 to 8%, but it's not guaranteed. For example, if you invested in the S&P in January, you're down 19% on your money, a little bit more than that. I think like 21% or 20% right now. So the bond, the 2-year Treasury and 10-year Treasury are so much more easier because I'm like, all right, if I put in, $1 million, if I'm ultra wealthy, I can guarantee I'll get that 2 or 10%, or sorry, I can guarantee I'll get some thing in 2 years or 10 years because I'm giving the government my money. It's like an IOU to me. But it's not going to be like a 10x or 20x or 30, right? It's not going to be a 8%er. It's just going to be something that's guaranteed. So here's what's happening right now with the 2-year and 10-year. The 2-year is at 4.12%. Okay. Which means if I give you my money, I'm guaranteed a 4.12% return in my money in 2 years. Now, when bonds go up, it's bad for the stock market because why would I put my money in something super risky like stocks that have to have earnings and profitability and this and that, and there's so much stuff going on when I can get a guaranteed 4%? I mean, that's half of the S&P average of 8%, right? So the 2-year is 4%. Now look at what the 10-year is. The 10-year, okay, let's get to the 10-year. The 10-year is 3.668%. Now you may be asking the question, why would I go to the government and I would be like, hey, I have $100,000. And they're like, okay, if you give it to us now in 2 years, we'll give you 4%. You're like, okay, cool. But in 10 years, we'll give you 3.6%. You're like, wait a second. So for 8 more years, I lose my capital. I'm illiquid for 8 more years. And you give me less money, even though I give you as a return, like on that IOU, that bond, even though I give you more time for you to do something with that money. It doesn't make any sense, right? Like why, if you have less time in the 2-year, you should be getting less percentage back on your money versus the 10-year. This means that the 2-year and the 10-year have inverted. The 2-year is giving you a better rate of return over the 10-year. And that last happened that first time that happened in 2022 was April 1st. Every time the 2-year and 10-year invert, we are on average 6 months to 22 months away from an actual recession. Now, technically, we entered into a recession as soon as that kind of happened because the technical definition of the economy and GDP being negative for 2 consecutive quarters happened after the 2-year and 10-year inverted. So we're like in a recession, even though the White House kind of changed that definition. But see, that's what's going on right now in the market, which is so interesting. And by the way, shout out to Gabe because Gabe did a bit of an explanation of this as well last night if you're in late night stock talks. So the 10-year average is S&P 94 is compounding rate of return is 10%. Yeah. And 10-year average is 16%. So this is the thing that's super interesting. It's like, this is the wanky part of the market. Why are we getting better returns on the 2-year versus the 10-year? And would that mean that people don't invest in the market if they can just get their money back in bonds? So we would have to see that come down as well as we see the stock market get back to normal, if it ever, gets there anytime soon. Amazon, oh my, Amazon's getting pummeled. 117. Wow. Some of these companies are getting hit. Google, obviously below 100. Yeah, if you got your money anywhere, man, where's Unity? Unity at 34. Open Door. Look at this. Open Door is 17 cents away from being a $2 stock. Spotify getting hit even worse at 92. Facebook 141. It's red. It's just red everywhere. It's just red. That's all we got. We got 69 likes. Shout out to everyone giving 69 likes. I thought that inflation was getting better, but I went to Whole Foods yesterday to buy LaCroix and they raised the price by 50%. Wow. That's not good. That is not. Yeah, I mean, like, look, at the end of the day, that is rough. It's a red day. It's a very, very red day. The market did not like the 75 basis. I mean, you thought they liked it because they baked it in, but it's not. Wow, look at this. NASDAQ is 88 points away from being at 10,000. Remember, 10,565 was our bottom. Honestly, I kind of want to see it like, yeah, I kind of want to rip the Band-Aid off, but it's getting there. It's getting there. Palantir at 761. I'm interested why Karp did an interview today. AMD, oh my goodness, AMD might go below 70. If AMD goes below 70, I might start a position, to be honest. Like 65-ish, 64-ish, that would be, I mean, AMD is still a phenomenal company. Like 44 on the RSIs. But I think Karp went on the interview, the CNBC thing today, because they released that letter. And I think, I don't know, maybe Q3 earnings are not going to be that bad. Maybe it wouldn't be that bad. Amazon was 106 in March 2022. All right, so it's got a little bit of more room to go. Everything's got a little bit of room to go. Shout out to Shamastical TV. Can we get some mother effing hype from a main man, Amit, doing that great work on DNA and getting his cousin Shamastical in it as well. Amit is legit. Shout out to you, bro. Thank you for the $5 super chat. Again, please don't buy based off of my analysis, but do your own due diligence. But I think I'm trying to do as much due diligence as I can to really, really explain it deeply. Back to the mic. I'm guessing you're compressing the video audio really hard. So when you get back to the mic, the compressor opens up and boosts your mic just wrong. You watch the comp meter at VidPlay. Yeah, it's probably true, Darth. I got to fix that tonight. I'll try to do that. But DNA is an interesting stock. I have some more videos coming about it today. I think at this valuation, it's stupid. It can get even lower though, because the market is irrational and things can get really bad. But Kathy Wood, by the way, let's just look at her shares from her stuff from yesterday. To my little surprise, she bought a little bit more of this company. And again, the reason why I'm analyzing it is just because I think when someone's buying at this heavy level, like you've got to at least ask yourself what they know, right? When Kathy sold Palantir, she was correct. As much as I hated it, she was correct. She sold at the right time. And why? Because the government was going to slow down, not because the government actually slowed down, but because the procurement of the government revenue into the company literally was going to slow down because of everything going on. Now, did she know the geopolitical stuff with Ukraine, Russia was going to happen? I don't think so. And she probably was wrong on that. But overall, she was wrong. Or overall, she was right for selling. So Kathy yesterday bought 286,000 Ginkgo Bioworks ticker symbol DNA shares in RKK. She bought some other couple of stocks. She sold out of Signify Health. And then she bought 502,000 in ARKG. So combined 800,000 shares. It's a lot more shares, man. It's basically buying almost close to 700,000 a day, which is a bit wild. All right, I think that's it for me today, guys. Thank you so much for joining. Please check out the link in the description to my startup. Would appreciate everyone, if you have not signed up, to sign up and give me some feedback on it. And let me know what you guys think. Have some awesome content there. We are trying to change the way audio is discovered, so I would appreciate that. Thank you all for joining. I have a couple videos dropping today. One is probably going to be about SoFi. Another one about Ginkgo Bioworks. I will see you all in the market close at 3:45. And then if you're new to this channel, we do late night stock talks every night around 10 o'clock. So I will be there. Gabe will probably be there. And we will keep talking from there. So thank you all for joining. It means the world to me. We got 300 people today, which is awesome. We usually don't get 300. So thank you for everyone for being here. I will see you at the market close at 3:45. Have a great day. Almost close to Friday. Let's end out this week, no matter what hardships you're going through, because we're all going through some. We're blessed to be alive on this planet today, which means we have an opportunity to try. And a lot of people don't have clean water. They don't have a lot of people just probably have it worse than you. So if you've got something to do today, no matter how hard it is, go out there and kill it and try your best. And let's get through the day. I will see you all at 3:45. Bye-bye, guys.